Hey everyone, welcome to this week's release of the Hashrate Happy Hour Podcast. On today's show, I am joined by JP Baric, the CEO of The Mining Store. This was a fantastic conversation about the mining store's start and the differences that JP is seeing between procuring power back in the heyday versus now. And then we start to get into a discussion about some of the challenges that he has been seeing in the marketplace when it comes to partnering with small utility companies. JP really is an OG in the space, starting back when he was just about 13 years old, and this episode is absolutely packed full of deep experience and great perspective. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through the 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. Hey everybody, welcome back to the show. Like I said in the introduction, I'm here with JP Baric at the Mining Store. JP, welcome to the show.
Thanks for having me, Ben. I'm excited to be here.
Yeah, man, I'm pumped. It's Friday afternoon. We're going to close out the week having a sweet conversation about all things mining, power, and what's extra fun about this one, it's kind of like the long lost episode. So I'm super happy we circled back and got to bring this one back to life.
Yeah, me too. It was a good episode. We recorded it. Sadly, I was doing it off my phone, just moved into a new apartment. Didn't have the internet wasn't good to do it, I guess. And we're here recording. So I'm excited to dive into the details of Bitcoin mining and whatever else we get into.
Yeah, I've been having all sorts of my own technical difficulties. I just had Zach Bradford with CleanSpark on, and he was a champ. He fought through like 15 minutes of technical difficulties all on my end. It was like, man, so I get it. Yeah, super glad we could pick this one back up. So, JP, I think the best place to start, you're like an OG in the space. You've been doing this since you were 13, something like that. I mean, you've been doing this forever. Maybe give me, the audience, everyone, just like a walk through your background. You don't have to go all the way back, but start wherever you want. I'd love to hear about your background and kind of how that got you into the space.
Yeah, so I got into Bitcoin in 2013. I was a freshman in high school, so pretty young, just from TechCrunch. From there, started buying Butterfly Lab units, which was one of the first ASIC manufacturers in the United States. Kind of had this like 2-week delay. I never really shipped their units. Got into GPU mining. Ended up raising some money from family and friends, and was one of the first like customers to buy 300 graphics cards from Newegg. And they're like, "Wait, why do you want 300 of these? Most people just buy one." So that was brand new to them, and started mining in Graham, North Carolina, an old paper mill with this U.S. Bitcoin shop, I think it was the name of it, or like way back in the day, one of the first public companies in the Bitcoin crypto space. And started the Mining Store in 2016 with the goal of democratizing and getting other people into Bitcoin mining who might not know what it is. Started by selling individual GPU machines, shipping it to their house, having the mailman wreck it, and then it never worked when it got there. So ended up pivoting to more self-hosting or self-mining, hosting, and running operations. And it's been a journey both, since 2016 to now, both for me personally and professionally. I was going to school for computer science, ended up dropping out of NC State to focus on Mining Store and the Bitcoin ecosystem full time. And I've had the ability to learn more about energy, learn more about the energy markets, learn more about managing people and projects and raising capital and running a facility 24/7 and social media and marketing. And so it's been such a journey. And I'm so excited to share some of the insights that I've learned on that journey with others who might be interested in pursuing a similar path.
I'm excited to get into all of that as well. Yeah, I mean, it's fun. You start with like one thing in mind, and for you is like, yeah, just get your hands on as many GPUs as you can, and then it turns into next thing you're running point on projects, and you're having to figure out what is power. And how do you have the most, advantageous power cost as possible? It definitely leads you into all sorts of fun things. Maybe just to like double click on the Mining Store. You guys have quite a few different offerings, everything from like people can buy miners from you, they can have things hosted. Maybe just go a little bit deeper on who the mining store is for the audience?
Sure. So as I mentioned, the mining store was created to bring Bitcoin mining to the masses, to the individuals. And so what we do is we focus on, I would say, 4 different customer types. The first one is going to be $100 customer, someone who's just looking to get their foot in the door. And we attracted or went after that space with something called the Reg CF framework. So I was a big component of trying to get hash rate in the hands of the people, sell hash rate sales, looking at cloud mining tokens, all these things over the years. But what we saw in through regulation was that those were all securities and were unregistered securities that the SEC, came down on those founders and they I had to stop selling them. So for us, I was able to come into something called the Reg CF, and regulated crowdfunding allows anyone in the US to raise up to $5 million per year. And what we're doing is we're working with influencers, and we're helping them equip their audience with knowledge about Bitcoin mining and allow them to invest in a special purpose vehicle dedicated to Bitcoin mining. And how is this different than just investing in a public company? The thing about these SPVs is the corporate and general management costs are fixed. You know exactly what the capital allocation is going towards. It's buying machines and paying for insurance. There's not these ancillary costs that are being thrown on the investor. There's not more share issuance. And so you're really getting an SPV for Josh Terry, who raised around $680,000 from over 1,000 investors. That is a 5-year lockup. And then after 5 years, the Bitcoin and all the distributions will be paid. And then different depreciation and appreciation of the assets pass through the investors in their K1. So we targeted this, or we went through this route with BitVault simply because we didn't want to deal with all the support requests of having 1,000 clients or having clients that own one machine. When you own these machines and you have to manage the lifespan of the machines from start to finish as a host, it's a ton of work and it's a lot of responsibility. Yeah. So that's the BitVault program, from 100 to like $10,000 clients. Then we also have another program we launched back in 2019 called Managed Mining, which is a lease back model. And we provide energy at cost, and we take a percentage of the mining revenue and mining profits, which aligns our incentives. So these are for investors who want to make sure that they are able to enter into a contract where they're not going to have to worry about Bitcoin price dropping below a certain number where they can't pay their power bill. They're not going to have to worry about the expertise needed to manage manage payouts and manage hosting invoices, and they don't have to put up a 2-month security deposit. So it's really a white glove solution for those people who are looking to take a little bit less risk when it comes to mining Bitcoin and not be all in it by themselves. And then just like a lot of other mining companies out there, we have a hosting service where we provide hosting to the larger customers. And then now we're working on building a mine service, which is for family offices and hedge funds, where we'll consult, build the whole facility, help them acquire the land, negotiate the power contract for them, and then run that facility for a set amount of years. And that is, we're seeing a lot of interest in that type of $10 to $20 million price tag in order to get mining and own the real infrastructure underneath it and collect Bitcoin at a discount. So that's the mining store in a nutshell and the 4 services that we provide at this moment. And it's been a journey of ups and downs and scaling and growth and crashes in Bitcoin. And I've been able to see 2 halving events now and coming up on my 3rd. And so with that type of knowledge of and expertise as an operator, we've been able to really hone our skills and ensure we can provide a quality experience to the end user.
Yeah, it's fantastic. I mean, being through 2 bear markets, you get to see so much. I'm fascinated by the SPV model. Are you guys still doing that?
Yeah, so I'm actually about to launch my own BitVault. You can't really, there's rules about what you can and can't share off the platform. You can share offering specifics, but today just sharing in general what the overall program is, which is BitVault and the Reg CF. But it allows you to solicit securities online and be very specific with what that security is going to bring to people, which I think is an amazing way to get more people mining Bitcoin and to decentralize the network. And not enough people are doing fixed asset SPVs for Reg CFs.
Well, I ask, and I'm curious about it because I personally am fairly active in, commercial multifamily real estate, and the way that they typically, or at least the way that I've been going about it is investing in the limited partner side of the equation. I don't know. God, this sounds bad. I don't even know if it's an SPV vehicle. I know it's, an LLC carved up between a limited partner group and a general partner group. Is that pretty similar?
That is similar. You are investing in an asset holding company that's going to do one project at a time. So it is that sense where it's just one project, very defined, and the partnership there. The difference of how the Reg CF works is you're investing into like through WeFunder, which is going to be one entity on the cap table of this LLC, and so they are almost like a syndicate where they're syndicating all the capital, and then the nice thing about it is there can be as many unaccredited investors as you want. So there's not a limit like where you only can have 35 unaccredited in some of these offerings. You can have 1,000 unaccredited investors, and each unaccredited investor can only invest 10% of their income into Reg CFs each year. And so there are protections in place. And to do a filing, it's relatively cheap, under, I would say, $2,500 per Reg CF. And so to do the issuance, to raise the capital, it's a very effective vehicle.
Oh, no kidding. So I have to ask, and we'll get into like the energy side of things and all the mining stuff. But when you're like, are you guys showing a pro forma then for the perspective? Like, let's just say the guy that can throw $200 into this, does he have like a pro forma of what his 200 is going to do for him, or is it up to him to kind of run numbers and model out a pro forma?
We try to provide as much information as we can. When it comes to future projections, when you're soliciting the offering, you only can talk about what's happened in the past. And so when we are looking at an investment, we're saying, okay, if you put $100 in at this price point, at this time in the market, here's what Luxor says machines were worth. Here's how many machines the SPV would have bought. And then here's the return that would have been generated. So when it comes to future projections, it's a little bit harder to project in the future. We can do that, and we do that. And you have to be very clear with the assumptions that you're making. What is the difficulty rates going to increase? Yeah. What's the hash price going to do? What's the Bitcoin price going to do? And I find that to be much harder than to do a look back of like, okay, what did an S9 return? What did an S19 return? But the reality is we're trying to give, and we're giving people Bitcoin mining exposure that wouldn't have been able to access it. And most of the investors, or about half of the investors, were actually outside the United States that invest in that Reg CF. So this isn't just limited to people in the US. They can also invest outside the US. People outside the US can also invest in these SPVs.
It's so cool. I appreciate you going down the rabbit hole on that one for me. It's some personal curiosity. We'll probably have to sync up in person, and I'll probably ask you a shit ton more questions on that.
Sure, I'm happy to chat more. It's a great vehicle. I wish more mining companies and more people in general used it, as I said, to provide fixed income returns, not necessarily VC level returns. Those are great, but that's what crowdfunding has right now. It's like, oh, it's great to support my local business, but where's my liquidity event? And these nice thing about these vehicles is they have a defined liquidity event in the operation. They have a defined shutdown date, so as an investor when to expect your capital.
Yeah, that's just another component that makes it really attractive. My wheels are spinning on that. Very cool. Well, so like I said, we'll kind of dive into the power side. So you mentioned it when you gave us like a walkthrough of your background, and when you started, it was more so a focus on like just getting the hardware, and like that was your background, your schooling was hardware, but then you quickly started to go like, oh, well, you need to pay attention to this power thing. Walk me through like the genesis of like, when did you realize like, okay, power is really important in this equation? And then like, what were you doing in those early days to pursue more advantageous power costs?
So I would say the first time I realized the need for a hosting business, or the need to be running, was just the difficulties in building a business that's on one-time sales. So when you're trying to hire people, you're trying to get steady cash flow. That's the goal. And so when you have these one-time sales, it was great. Sell some GPUs, make $40,000. I'm 18 years old. I'm like, this is amazing. I can drop out of school. Then you realize, wait, 40K doesn't really go that far, and you realize that life,
That's
you
right.
need cash flow, and businesses live or die on cash flow. And so that's where we started to pivot and understand, okay, how do we actually run our own infrastructure? And it was a journey. I went from Graham, North Carolina, all the way up to the Dalles, Oregon, where I co-located with a group up there called Oregon Mines back in the day. We put an application in the queue in Grant County. There was 800 megawatts in that queue, and that queue sat empty or sat full for 2 years before they even began to process it. I traveled all over the Midwest, Colorado, Iceland, looking for an opportunity. At that point in my life, I was pretty young still, and I still didn't have the capital to go in and build a 10, 20 megawatt project. So I was looking for something small to get started, to get my feet off the ground. And eventually what happened is we found the opportunity to provide services to renewable energy companies who needed to get connected to the grid. So in order to get their tax incentives, there was a company we worked with called BioStar Renewables out in California, and they needed to show interconnection or energy usage. They called us up, I think on December, let's say 20th. And they're like, we need to be plugged in and energized by the end of the year. This is after we've been negotiating and we didn't know if the deal was going to go through. And so, it's Christmas Day and I'm out there plugging in machines, making sure that we can get energy. And so that's some of the dedication and commitment that we had, and how I got to start learning about there are needs of these solar and wind developers that you're not really seeing as a normal, individual who's buying power from the local cooperative. So from there, I started realizing the value of stranded energy and exploring wind farms and purchasing wind farms, and got all the way up to a point where we were about to sign the purchase agreement of a wind farm asset, and Biden passes the Infrastructure Act and the whole deal falls apart after working on it for 2 years. So I've been, on this journey, and I'm always educating myself and looking for more opportunities. But at the end of the day, it's all comes down to how cheap your energy is when you're mining Bitcoin. That's what's going to make you be able to build a successful, well-run operation. Energy prices at 6 cents. I would tell anyone who's getting into mining, if you have 6-cent power, that's too expensive. If it's a bull market, yes, you can make some money, but you need to be closer to 5, 4.5, 3.5 cents energy in order to be profitable and to make it worth your time in the long run.
Yeah, I think especially like you just said at the end there, if you're looking at the long run, you really need to be in as low as possible. That plus the efficiency of the machines you're running kind of coupled together. So maybe just to go back, what was the specific part about the wind and renewable energy? What drew you to that? Was it just that they had a PPA that you could sign that was super cheap, or were they telling you hey, we've got just a ton of what was going on there?
So for me, it was the fact that wind energy is non-fuel based energy generation. So that means the cost to operate one of these wind farms is significantly lower than the cost to run a natural gas, coal type of generation. So with wind, we calculated that the power price was around $3 per megawatt hour to generate energy about 50% of the time on an 80 megawatt load when the wind farm was over 120 megawatts. And so this wind farm had this capacity factor, so we could get power for $3 a megawatt hour. Once you added in the cost of that wind farm to buy the wind farm itself, you're looking at close to $11, $12 a megawatt hour if you amortize that loan over a 5-year period. So with that type of energy, it is insanely, extremely cheap. That doesn't include the REC credits that you can get. And so what we did was we merged.
That's a penny. That's a cent per kilowatt hour.
Exactly.
That's unbelievable.
So what we did was we merged the grid pricing with the wind pricing, and then your all in is 2.5 cents. And having that deal is something, as I mentioned, didn't work out, but it showed me the possibility of what's out there. And so now, as when I approach the energy markets, I try to approach it a little bit differently, working with local cooperatives, helping them with deploying in these areas that are suppressed and do have a lot of cheap or negatively priced energy due to the nature of the incentives for wind and solar. And so what we're seeing is that there's massive amounts of solar and wind coming into MISO, coming into SPP in the queue, and no one's buying this power. And so a lot of the contracts from local utilities, they're going from a traditional, we need to shave our peak contract to we need to allow these Bitcoin miners to buy from the market because we don't want to have the exposure to them, which then allows me as a miner to determine when I want to run and ensure that I can get those negative or low cost hours in the energy markets. So that's how I see this moving forward in the future and across the Midwest. It's simply building facilities where there's stranded energy, there's a lot of constraint on the grid, and the utilities are coming around. They want to work with miners now. They are still hesitant on financing larger substations, but they're coming. 18-month projects, 24-month projects. Utilities are willing to front that if they can find a mining group who has some facilities already running and who has some expertise. And with that, I think it opens the possibility of getting access to that 2.5, 3 cent power through the grid, assuming you can find a contract where utility's not trying to rob you and saying, hey, we're a monopoly. You can't negotiate with us. This is a sign the contract or leave type of deal. And I've had those conversations, and it's really frustrating when you're put in that place and you're like, this isn't fair. Well, guess what? It's a monopoly. The utility industry doesn't care about you. And once you learn that, you want to try to build something new or find people who do want to work with you and do see the benefits of how you can mutually work together. And so that's been the journey, and it's a constant journey. And I can't wait to, continue to do it and launch more facilities with unique structures like the one I explained earlier.
Yeah, totally. What are some of the other, like, either what's some of the pushback or like points of friction? Like, you're approaching a brand new, it's a wind generation asset owner, and you're approaching them for the very first time. What's a pretty typical pushback from them? Is it like, what the hell is Bitcoin? I don't even know what that is.
A lot of the pushback is credit, is lifespan of the project. That's part of the reason why we had to buy the wind farm, because they didn't want to deal with us as an off taker. They said, oh yeah, we'll do the deal. We'll just sell you the power at a flat rate. But then they realized, actually, no, I just want to sell this asset because it's over 10, 12 years old and it doesn't have it doesn't get its credits anymore for generating. And so with a wind farm company, you have to understand kind of where they're coming from. But I do think one of the best ways to approach the market is to acquire those stranded assets, because they are, what other use cases is there for a wind farm that is only producing RECs, no longer has tax credits? And the solution that, is kind of out on the table now, which is putting competition on Bitcoin miners, is hydrogen. It's hydrogen production, and it's hydrogen production at these substations for tax credits with minimal, I would say, impact to the local community, minimal value after it's constructed, minimal jobs, versus a Bitcoin mine, 80 megawatts, you're at 40 plus staff. You're at around the clock. You're at a tax base. You're at a property taxes of the data center. So there's a lot of value in these data centers, but sadly, energy companies aren't in the game of building value. They're in the game of tax credits, and they're in the game of increasing shareholder value, not necessarily production and manufacturing and local communities.
We'll be right back after this message from our sponsor. Support for this episode comes from Sunnyside Digital. Are you ready for the next Bitcoin bull run? Get ahead of the game by building out your Bitcoin mining infrastructure now. Sunnyside Digital is your one-stop shop for everything Bitcoin mining, from transformers and switchgear to racks and miners. With a white glove approach to understanding your needs, they'll provide you with the hardware you need at the most competitive pricing possible. Say goodbye to your sourcing headaches and say hello to Sunnyside Digital. Contact their sales team today at sunnysideinc.ca or via email at sales@sunnysideinc.ca. All right, now back to the show. Yeah, I was just about to chime in and say, I think, probably the biggest reason that that's gaining so much momentum, because it is gaining momentum, is that it's a game of tax credits and government subsidy. And it's a game that especially the renewable energy sector understands like intimately. So I think they see this, oh, well, duh, I know how that game works. We'll just plug that in addition to what we're doing here. Yeah, unfortunately, it's a no-brainer because, it doesn't really add a lot of economic value.
It's the nature of the free market, right? Really free until it isn't.
Yeah, I know. So you were saying that it almost just makes more sense to go right into like buying the underlying asset as opposed to like trying to have some of these discussions with some of the operators.
Yeah, just because of the level of complexity and depth within these organizations. You have, the asset manager, you have the portfolio manager, the business development individuals, and you have the lawyers and you have the executives. And so the board, right? So a lot of these energy companies are invested with pension funds, with state pension funds. So they have these vested interests and they have to go ask the North Carolina pension, hey, can we sell our power to a Bitcoin mine? And it needs to go in front of a board. I mean, in what world is the pension going to say yes? So usually it's, hey, let's buy this asset because it's not performing well for you, and there's a limited market for it. And that's been kind of one of our strategies in the past and in the future.
Sure. So maybe going backwards a little bit, so understanding that, kind of looking to the future here, you guys are probably going to be more focused on going in and pitching, purchasing the actual generation asset, which we'll fast forward and talk about that too a little bit more. But were you like, I guess maybe some of the pain points of just like buying power, were they doing things like making you put up, large amounts of money up front, or were they doing anything else? Because I guess that why I asked that is I keep hearing that, the Bitcoin mining industry is not punished, but, they're getting pushed into putting more credit up or putting large like annual deposits down. I mean, were you seeing some of that stuff too when you guys were just
we see that across the industry, and it really comes down to who's negotiating on the other side of the table and how do they feel about Bitcoin? What do they believe in it? Do they trust it, or do they just view you as a nuisance? Do they view you as a sucking energy, no value add resource that they don't even want to service? I've had energy companies that are utilities lie to my face, tell me that they can't give me power at sites. And I'm like, that's discrimination. If I signed a lease and I'm ready for energy connection at a substation, you can't say that I'm not allowed to sign, get power. So that level, that happens a lot in this industry. And the credit requirements are another great example. As a flexible load resource, I have to put up additional credit already above and beyond my 2-month deposit you have in cash that you won't take in a line of credit, but it has to be cash held in your National Rural Utility Association bank account, and then I have to post additional credit just because my load can turn off and can help the grid. So it's like there are all of these very misunderstood, we take no risk. We want to make sure that you have to put up all of this credit because then it makes it harder for you to build out new facilities. We want to, an example, we want to take your fee from $1,000 a month and you've already built your facility, but we're going to increase it 5 times. And that's our monthly service charge. Well, what changed? The service didn't change. But then it's like, who do you go to? Sadly, there's not any regulatory bodies out there. And so the only way to really bring this conversation to light is to sadly go to court and take it through the courts, because even going to let's say the utility board in Minnesota, that doesn't govern local cooperatives. It governs state-owned, it governs investor-owned utilities. And so there's this gray area of utilities, and there's so many of them. They're so small. Some of them are great to work with. Some of them have great relationships. Other ones, they're like pulling teeth, and it's a lot of work to get across the finish line.
Yeah, I completely agree. And you brought up, I live in Minnesota, and yeah, it's, if anyone in the audience listening knows people, on our like public service commission board that can make introductions, I would love an intro to that board. Cause I'd love to have that conversation with them too. It's goofy.
As we want to add this renewable energy, as we want to add increased transmission lines, like there needs to be more load. We don't need all this energy. And sadly, the ratepayers, the ones that are going to get dinged, the transmission line, no one wants to, renewable energy developers don't want to pay for them. But sadly, because of all this new energy that's going to need to be interconnected, it's going to be ratepayers. And so the only way to reduce rates is going to be to use more energy and amortize more energy over their substations across the portfolio and make sure that the energy is actually being used versus just going to waste, going to heat, and everyone's collecting their tax credits saying, we made money, but who cares about the people?
Absolutely. And I go back to this so much. It's like, where is the educational breakdown for people? Because again, when you look at like it's just supply and demand and just like basic economics. You look at they have they have the ability to produce so much electricity, and then they have so many users of that electricity. And if they don't have enough users of the electricity, the cost to those users is going to be higher. And so if you have more users, Bitcoin mining facilities soaking up that power, they can start to drop that power rate. And then it starts to get closer to just the base cost of the generation versus they're baking in the cost of the transmission, the cost of the build, the cost. I mean, you look at your power bill, and your power bill is just how much it costs the power company. That's all it is.
Yeah. And it's scary, and it's sad that we're moving in that direction there, that there isn't levels of transparency in these systems. When we talk to cooperatives, they sign a 100-year contract with their distribution cooperative. It's like, and I joke around, I say, wow, the private jet and the dinner must have been great. That must have been a great steak, like who the hell is signing 100-year contracts? In what way is that beneficial to your community? But at the end of the day, it sadly doesn't matter. And it's all, mostly politics. And it's mostly, how can I help, my next door neighbor a little bit? And so that's kind of where we're at in the energy industry. And it's a dark, deep truth, but I'm hoping with more transparency, more clarity, more questions, more conversations about the energy we consume and the energy we produce and why we're doing it will only bring, farther insight as Bitcoin mining expands and matures. And as people start to use electricity to charge their cars, to operate more of their house,
that's right,
and become more aware of, you can make money from electricity. It's a tool that everyone should be able to turn to, an economic value for themselves and produce wealth from.
Yeah, I think that was one of the bigger eye-opening things for me. And I actually just heard about it, just kind of had the revelation about it recently, was what Bitcoin mining and Bitcoin provides is this opportunity to look for a low cost of power as a source of revenue generation versus just a saving, aspect to a business or even just your house. Yeah, that was pretty eye-opening for me. It was like, oh wow, this could be something where people are going to start having access to cheaper power, and you want to heat your pool, do it with Bitcoin mining, and you can monetize that. That's pretty cool.
The grid needs flexible demand. It's something that we need more and more of, and Bitcoin mining is a great use case for that. And it works for an individual, it works for a business, it works for a mining company, it works for a nation state, it works for a community. So the more that we adopt flexible load and we adopt the ability to amortize more electrons over existing infrastructure, the better off communities will be across the world.
Absolutely. So I have, and admittedly, it's a little bit of a selfish question, because this was actually a scenario I ran into fairly recently. What has been or was your approach when you were working with, let's just say, a co-op or a small municipal power company that was interested enough in Bitcoin mining to take the call in the meeting, and then at the end they said, well, there's just so much history of these facilities going away, and then we're on the hook for all the infrastructure and everything else here, so I think we're going to be out. I mean, how would you approach that?
Yeah, so a few different kind of comments and thoughts on that. So when it comes to the infrastructure, usually as a Bitcoin miner, we're paying to upgrade that substation. I would say very few times is the utility fronting any capital to upgrade that substation. And we're paying for usually, simply just the raw cost to get it to where we need to use it. Not only that, is we're bringing in our own transformers, right? We're stepping down our power. We are posting collateral. And so when it comes to working with the utility, it's kind of highlighting them the benefits. And what we also do is there's some really good presentations online now with ERCOT and other utilities, and the value of a demand response resource on the community and on the local power rates. I think there was just an MIT paper on it. And so showing and equipping the utility commissioners or their board or the CEO, the managing partner, with this knowledge and information, allows them to see that maybe there is some value here. Maybe we can work together. But for them to say, hey, we're not interested, usually what they'll say is, we don't know how to get you a rate that works for you. Because they can't just say, no, we don't want to give you power. They'll simply say, hey, a rate class of 7 cents, does that work? And next thing you know, that's a no, we got to move on. And sadly, the utilities, the local cooperatives, most of them or all of them almost, they flow up into a distribution cooperative. The distribution cooperative flows up into a larger cooperative, usually a regional cooperative, and that's the one who buys power from the market. So you're already 3 layers removed from buying energy from the market. And so when the local cooperative says, hey, I have a new customer, they want to bring jobs to my community, they go up to their distribution cooperative. The distribution cooperative usually looks at them and says, sounds like your problem. You should figure it out. And I've had CEOs say, I just got this job last week, JP, I'm going to work on this, but I don't know if I can do it. And so for them, it becomes a low priority task, and then it doesn't get through, and it just gets stalled out in discussion. But again, that's all because it's better for us to keep the system in place than to try to design a contract that would work for this new rate class. And so what we're working on now is giving utilities a contract that says, here's the contract we'll sign. Here's how it's a win for you. Here's how it's a win for us. Would you like to do a deal? Would you like to bring economic value to your area? We go and talk to the port authority or the local economic development group, and we get them to be an advocate. And that's how we've starting to see success. Whereas no longer are we going to have to, figure this out ourselves, but here's a standard contract in SPP and MISO that we've signed before in operations. And here, go talk to this utility, get their feedback, tell them, let them know how we are, with working with them. And I've heard that my name gets brought up at some of these utility conventions because I'm a TikToker and I'm loud and I'm out there talking about Bitcoin mining. And so, it's been interesting to hear utilities say, oh, we finally got the call from JP. Like, he's here and ready to start building.
Oh, that's pretty cool. That's pretty cool. What I really like about that is you guys are bringing it to them, because you're right. It's a lot of the times I find is when you confuse the person, even if they're super interested, like they're listening, they're engaged, and then all of a sudden it's like, I don't know how to do that. But what you're saying is you're alleviating that point of friction by saying, okay, here's the cookie cutter. Here's what we've done in the past. You can take it and run. And we'll jump in where we can. Let's get this done. I like that a lot. And I think that's probably the single largest value that you bring to the people you're working with who want to build out. Because I think you mentioned kind of that 4th pillar of the mining store is you'll work with clients to build out a site for them.
Exactly. And so that's where that's coming into being useful for us in these new developments. And it's starting to work, and we're getting great conversations, and they're being more open to market-based rates, and it's opening up access to facilities and sites where they were not feasible. And then on the local community level, when it comes to zoning, and I've had my ring been rung through the zoning commission plenty of times. Now what we do is we just say data processing facilities. We come in and we're saying, we're building a data processing facility. Here's the benefits of flexible demand. You have a goal of reaching sustainability. You want to deploy more solar and wind in your area. This is going to help achieve those goals. Minimal economic and minimal environmental footprint. We're paying for the upgrades, and here's the staff we're going to hire, which are going to live in your city. And that keeps it out of the press that there's a Bitcoin mine going up, and we still have to go get our conditional use permit or, get our zoning changed. But we've kind of approached it that way with the commissions that regulate the zoning in the United States.
I hope that we look back 10 years from now and we all get to laugh about how we use terminology for things that we're processing selfies and TikTok videos instead of, rolling out the red carpet to have a sounder money. I hope we get to laugh about that 10 years from now, because that's just hilarious. That they're more willing to accept data processing, and data processing is very important just in and of itself, but it's funny.
It is funny. And the sad thing about it is once you mention Bitcoin, I get defensive, right? I don't know what it is. It's used for drugs, like who
still is that narrative.
It uses all the energy in the world. Like, and I can't fight that. You just got to be like, if they ask you, you're honest. You say, yes, some of our customers do Bitcoin mining. Right? But that's not what's important here. The importance is how we can affect the grid.
Yeah, you keep the focus on the value proposition that you're putting on the table for them. I think that's it's just going to lead to a more productive conversation. So JP, maybe talk to me about, we're in a bear market. We're still in a bear market. It's been tough. It's been painful. It's not your first one. It is mine, and I can tell you it is longer and deeper. And just like as an example of how deep and long and painful this is, I just bought a pallet of 10 miners for the same cost it cost me to buy one 90 terahash miner like a year and a half ago. So it's been extraordinarily painful, but really good learning for me personally. Talk to me about how you guys are building. You kind of touched on it with some of the fun stuff you're doing, again, with that fourth pillar of your business. But what are you guys doing in this bear market? How are you preparing? It's not your first one. Talk to me about, kind of what you guys are doing.
Yeah. So for us, we've been focused on building out rack space, just getting as much rack space as we can online, signing more traditional hosting contracts and building out the rack space so that we have the option to go in and fill that rack space up when we want to, when it's the right time. Now, there was a great kind of quote that someone shared with me, which is a mining machine, that you own in a box or on order with Bitmain is worth so much. It's worth $4,000. A mining machine plugged in, running, is worth $6,000. A mining machine plugged in, running, and in a public company is worth $9,000. And so that's kind of the value as you get closer to the capital markets, as you get closer to this constant search for yield that we're seeing is you want to make sure that your cost of your machine, as you mentioned, you bought 10 machines for the price of one, that cost of that machine is you allocate that capital when you're certain that it is the best time to buy those miners. Because the sad fact of it is if you bought a miner in 2021, even in July of 2021 till now, you are still have not made your money back on an S19 that cost you $6,000. It's been 2 years running that machine, right? If you did not sell your Bitcoin every single day and you're looking at Bitcoin price today at 30,000 and you mined whatever amount of Bitcoins, you are still not profitable today. Don't even add the interest costs, the cost to build that building. And so mining is all about timing. And you make a lot of money in mining getting in less than a month-long period, and you lose a lot of money buying machines over a 2-year period. And so that's the most important thing. Bitmain understands this so well. That's why they're one of the most profitable companies in the space and maybe even in the world, is because they can make a chip for the same cost, or cheaper with every other unit they produce. And they can sell that for way more than it's even going to make. And someone else has to do all the work.
Yeah, it's been a big lesson for me, which is what's fun about it is I took a crawl, walk, run approach to this whole thing. And fortunately I was crawling when I was learning the painful lessons, which was when to start buying stuff and when to start deploying and when I should have been building. So I mean, everything you said, you have to go back and rewind and listen to that. Cause that just shows the seasoned vet. You've been through this a time or two.
And I make the same mistakes, right? Like I'm one of the guys who bought S19s in 2021 in July, right? That's why I know that fact, is because I'm that guy, right? But it's like every year, you learn a little bit more and you realize, man, it's sometimes good to take more cash off the table when, machines are going high and crazy. And it's a good time to buy, long dated options when Bitcoin mining companies are in the shitter and going bankrupt. Let's look at when to sell and when to buy, and don't just follow the crowd and the hype. And when mining's profitable, when it's really profitable, when everyone wants in, that's when you should get out. And when people are selling after the halving, and
you
it's
should be
bloody,
very scared.
you should get back in. And it's as simple as that. It's the one piece of advice that I give to people is you can lose a lot of money in Bitcoin mining, or you can make a lot of money in Bitcoin mining. It's one of the most volatile assets in this space, in the industrial business.
Yeah, it's super exciting. It's exciting because there's just so much going on with it, and there's so much to learn about it. So JP, just to be mindful of the time, again, it's a Friday afternoon. You've been gracious with your time. I did actually want to ask, what would be a piece of advice, or how would you speak to an entrepreneur who's looking to get into this space? And we were just kind of talking about it, but maybe go a little deeper. Like, what would be some advice that you give to an entrepreneur who's like, man, Bitcoin mining, that's it. That's what I want to do. I think that's, where the future's going. What would you say to them?
I would say you don't have to be doing a lot of things to make progress. You don't have to keep yourself busy to make money and to be successful in the Bitcoin mining industry. What you do have to do is you have to be very, very, very specific with what type of energy contract you sign and understand clearly what that energy cost actually is going to be with your demand charges, your taxes, your transmission charges, your energy cost. And if you have a bad contract, you cannot win, no matter how hard you work, no matter how long you try. Mm-hmm. And the second comment is the capital deployment strategy is deploy capital when no one else is buying machines, when you can get good deals, and sell. Manage your portfolio. This isn't a long Bitcoin mining play. I'm always going to own these miners. You can play that, and that's definitely a way people have played the game. But it's more important, in my opinion, to know when to take cash off the table and to know that Bitcoin is the most valuable asset in the world, but sometimes it's very overvalued and sometimes it's very undervalued. And so because of that, have a long-term horizon. Don't feel the need to keep yourself busy with projects and other things, and focus on making a few right decisions over that 4-year period. And there's a great chart, which is the chart of the hodler, which can show you the different types of feelings that you go through when you hold Bitcoin over 4 years. And I can tell you that those feelings are so true going through my third rotation of it. And, human psychology builds markets. A Bitcoin is this intangible asset that we create and we talk about, and it provides freedom to the world, and it protects you against inflation, which is just taxation with a representation. And so it's such a strong opportunity for all of us to be freed from the depths of the 9 to 5. But the only way you can do that is if you are very clear and concise with how you're deploying your capital and when you're doing it.
Absolutely. I appreciate that, JP. That's fantastic advice. And I'm listening too, because this was my first go through, a full market cycle. So yeah, I really appreciate that. I always like to leave room at the end here. I want the audience to be able to get in touch with you. How can they find you? Where can they find you? How can they get in touch with you? That sort of thing.
So I'm on Twitter. I'm at Mining Store. I lost my other Twitter account, sadly. So JP Baric, I need to get that back. If anyone knows Elon, send him a DM for me. John Paul Baric on Instagram. Number one thing is I will never ask you for crypto. So don't send me crypto on Instagram. People impersonate me. At JP Baric on TikTok. And then you can always send us an email, sales@miningstore.com, and reach out, miningstore.com/learn to learn more about Bitcoin. I also have a podcast, Digital Gold. It's pretty old, but you can listen to some episodes on there. There's some great gems in that. And the Reg CF, I'll be putting out more information on WeFunder. So that would be Bitvault on WeFunder.com. And you can find that on Google if you're interested in joining my Reg CF in the next couple months.
Awesome. JP, thank you so much, my man. Taking some time on a Friday afternoon, bringing this one back from the grave. This has been a fantastic conversation. Thank you, and you take care.
Thank you, Ben.